I've got to share my screen, haven't
Share your
I?
screen.
Okay. So you just tell me when, Joe.
Yep, we're all good.
Excellent. Hi guys, this is take two. Just realised I was halfway through the presentation and there was no sound coming out, so not a great start. I'm presenting today a slide on Ichimoku Cloud. It's a great indicator. It's got trading strategies built into it, multiple trading strategies. So something that a lot of budding traders use, experienced traders used, and I'm going to plug a book at the end as well. There's a colleague from the Society Technical Analyst, Nicole Elliott, has written a great book on it, so I'm going to plug that at the end. I'm not receiving anything from it, but I think it's great. It's a great read, worth watching, worth reading, and you know, hopefully this will give you an insight into the cloud, and it will cover the basics of it. But if you want to know more, obviously do some reading, read a book, take some classes. So I'm Steve O'Hare, been in the market for 30 odd years, and I will just try and get this slideshow working. Right, let's move on with the slideshow. Got the wrong date on there. It's the 31st today. Right, so the Ichimoku Cloud, also known as the Ichimoku Kinko Hyo. That's the Japanese translation. And it basically roughly translates into one look equilibrium chart. So it's a chart, although it seems complicated to start with, because it's got 4 or 5 different components to it. Once you get your head around what you're looking for, it does give you a really nice quick look at any market, allows you to easily identify the trend on whatever time frame you're looking at, and also highlights potential signals within that trend. The indicator was developed by a journalist called Goichi Hosoda. He published a book on it in 1969, and as I say, there's a great book that's been published a lot more recently than that by Nicole Elliott. So grab that if you can. Initially, it looks very complicated, but once you get your head around it, it's easy to understand. We're going to go through the cloud components, the cloud, the signal line, the confirmation line, and the lagging line. And once we do that, you'll get a better understanding, and then we'll go into some trading strategies and some live images of from different charts. I'll pick charts at random just to sort of give you an idea of how easy it is to use. So 4 of these 5 components are based on averages of highs and lows of previous timeframes. So we've got the Tenkan-Sen, the Kijun-Sen, and we've also got the cloud components, the Senko Span A, which is the faster moving average within that component, and the Senko Span B, which is the slower moving average, and the Kumo, which is the area between these 2 lines, and that is the cloud. Kumo is cloud. Chikou span is a lagging line. I won't really go into too much detail on that, but I'll pick it up very, very slightly. It's one of those components that is there, but not used as much, but maybe some more time should be spent on looking at how valuable that line could be. So the first line we're going to look at is the conversion line, the signal line, Tenkan-Sen. So this is a line, the blue line here. Let me get my laser pointer out. All this great technology. That's the blue line. It's a moving average line, and that is the last 9 periods. So on an hourly chart, it'd be the last 9 hours. That'll take the high and the low of each of the last 9 candles and divide it by 2. So it'll be the midpoint of those last 9 candles. So the default setting is 9. It can be adjusted if you want, but the chart works quite well with it as 9. So that on a daily chart, that would pick up the almost the last 2 weeks of price action. Tenkan-Sen, the baseline. Now this is the last 26 periods of the high and the low divided by 2. So that's the default setting, as I say, 26 periods looking backwards. So on a daily chart, that line would take in a month's worth of data. And we'll move on to the Senkou span A, which is the leading indicator of these 2 lines. Now, what that does, that takes the previous 2 components and the conversion line and the baseline, and it takes the average of those. So it divides that by 2, and that's the midpoint of the conversion line and the baseline, and that then projects this forward into the future, into 26 bars in the future. So on a daily chart, that'll project it forward over a month. Along with the Senkou span B, which is based on 52 period high and low divided by 2. So that'll be a slower of the 2 moving averages projected forward 26 periods. So that's almost taking a month's worth of average, projecting it forward, and 3 months worth of average, projecting it forward. So the Senkou span B will be slower moving. All sounds very complicated, but don't worry too much because it will come together. So when these lines are projected forward, they will be at different levels, and they will basically form the cloud. So when there's a difference in that, if we're in an uptrend, normally that would project forward a green cloud. If we are in a downtrend, that would project forward a red cloud. So that offers also future support and resistance, which is pretty key. So here's a picture of the cloud. So we've got the leading span, the Senkou span A, the leading figure. This is the conversion line plus the baseline, and it's projected forward 26 bars. So even from this cloud, we can see in a downtrend, we've got the red cloud above. This acts as resistance. Remember, this cloud here would have been here when we were trading 26 bars previously. So on an hourly chart, 26 hours previous to that, you'd see the cloud would be offering future resistance. And price action, when price action breaks above the cloud, that's a bullish sign. You can use that as a strategy all on its own, but it's always good to have some sort of confirmation or use some other form of analysis to combine to make your strategy more powerful. So don't just take this as just an on its own strategy, although it can be used for that. Again, sounds complicated, but as I say, when we walk it through, it may not be so complicated. So when we are in an uptrend, so here we saw the prices moving higher, and then if we project forward 26 bars, we can see the cloud changing from red to green. So as we moved higher, we could see that support was building in the future. Now, a bit of a false breakout to the downside, which isn't great, but it does happen. So, you know, not every strategy or indicator is infallible, and the prices moved higher again. Now, you know, if you're just trading a strategy, which is just buying a break of the cloud or selling a break of the cloud, you'd be trading quite often if you're trading on a short-term time frame. So the other indicators which incorporated into this, the whole cloud, will give you some filters that you can use moving forward. So we'll talk about the lagging line. The lagging line, I'll talk about this briefly. This is actually projected 26 periods in the past. So that's the default setting, as I say, can be adjusted. and we can, hang on, let me double check where. Yeah, that's all right, the lagging line. Yeah, so that's fine. So that's projected 26 periods in the past. So again, that component can be used when we bring it all together and bring the cloud in, bring the signal line in, and bring the baseline in. It can all make a little bit more sense. So let's bring it all together. So this is basically all the components, and this is what you see when you log on to a chart. Now, if you don't really know anything about the cloud, and you haven't sort of done your homework on it, haven't read your book on it, or haven't taken a course in it, then this would probably scare a few people off. But once you break it down and then look for the lines and look for the cloud and bring it all together, it all makes a lot more sense. So as we can see in this chart, we've got buy signals. I'll actually go to the live charts to give you the sort of like show you some live signals. But bullish signals predominantly when price moves above the trend or above the cloud, the trend is higher. So you're looking for bullish signals. When the cloud turns from red to green, the trend is changing. And this, remember, will take place in the future. So you can see a change of trend coming up. When the price moves above the baseline, which is this browny colored line here. So when price moves above the baseline from below, then that is a bullish signal as well. And also when the conversion line or the trigger line, the blue line, crosses above the baseline, again, that can be a bullish signal. The opposite is the same. When we get price moving below the cloud, that's a bearish signal. When the cloud turns from green to red, again, this shows that we've got a bearish trend approaching. When price moves below the baseline, below that brown line, that's negative, that's a bearish signal. And also when the conversion line or the trigger line moves below the baseline, that is negative. So that gives you an indication of what we're looking at. Let's bring a live chart into it. So this is basically the chart I used to prepare the slides. I used it yesterday. And let's get a bit of a closer look. We can see we've had this bearish move down. And over the last month, we've had this big sell-off. And we can see that the indication all happened right back here. We had the blue line crossing below the baseline. Now that would normally be a bearish signal, or it is a bearish signal, but if this took place, which it sometimes does below the cloud, then that's a stronger bearish signal. When price action breaks through the cloud, that is a bearish signal also. When you're getting one component of the trading strategy ticking the box, you get another component of the trading strategy ticking the box, and also this lagging line, this Chikou span, when that is below the cloud in a bearish signal, when a bearish signal is forming, then that adds to the bearishness of the signal. So once you're in the trade, again, with this cloud, you want to stay in the trade and take it for as long as you can. There are a number of ways of exiting your trade once you're in it. You can get out of your trade when the price moves back above the baseline. And then also, once you are in this position, you've taken good profit all the way down, you can then basically look to trade it from the bearish side again. So price breaks down below the baseline again, the red line here. You'll be stopped out here, but eventually you'd have got short around about this level, 10,655, and you'd have stayed short all the way down to here to 9,400. So some decent moves and decent opportunities to trade this indicator on the way down. Let's see where we are over the last few days. We've basically got the conversion line breaking above the baseline just here. We're below the cloud, so it's not a strong signal, but when price breaks and closes above the cloud, that backs up the signal. So that you could take that as confirmation. Maybe get long around here. The stops you can use whichever you can use the baseline as stops. You can use the cloud as stops, or you can even use the price as stop. So whenever the price breaks back below the cloud, so you'd have been stopped out here. And this is the move that really would have been nice to catch. You've got the conversion line breaking back above the baseline as price moves above the cloud. So that's a great that's a strong buy signal there. The stop can be placed, a preliminary stop can be placed below the candle, which is broken up through the cloud. So that's your trigger candle. Stop could be placed below there. Very close to being stopped out 3 or 4 bars later, but managed to stay in. And again, price action moves nicely. From here, you'd be getting long around about 8,800. It went down to just about 8,600, so 200 pips offside. But then obviously prices moved strongly higher, and you could either wait for the conversion line to break back below the baseline, or price to break below the baseline, or price to break below the cloud itself. So decent move there. And yeah, I think it really is a indicator well worth studying, well worth taking time over. So, you know, get the book, look at a few more videos of it, ask us questions about the indicator. As I say, the trading strategies, you can look at the conversion line breaking above the baseline, or the conversion line breaking below the baseline, you know, for both bullish and bearish strategies. Price breaking the baseline, either way, bullish and bearish strategies. And the breakout strategy is when price breaks above and below the cloud, and use all the other indicators as confirmation. As I say, great book, Ichimoku Charts by Nicole Elliott. There's a link to it at Harriman House there. By all means, go out, get it. You can get virtual, the online books, the downloadable versions, a little bit cheaper. But yeah, hope this has been interesting. Feel free to email your questions, ask me more questions about it, and yeah, anything you need to know, do get in touch. Thanks a lot for your time today. I hope you enjoyed the slide, and look forward to seeing you soon.